Uranium miners on the ASX continue to rise rapidly, 23 through to 89% rise in the last month. We're having a look at the top 6 miners on the ASX and understanding the political movements that are help pushing the uranium price higher and higher for the commodity itself. There is a bill in the House of Representatives. We're talking about the US Congress here, HR 7222. It was introduced on the 23rd of March 2022, just last week. What we're looking at here in the highlighted section is the importation of articles of the Russian Federation classifiable under subheading, etc., etc., etc. What that summarizes down to is to prohibit the importation of uranium from the Russian Federation in all forms, U3O8, UF6, enriched. And it appears to expand importation to include withdrawal of material from warehouses in the US. This is one aspect in the last week, but even more recently, we are seeing news about investments happening in the US, or more internationally, we should say, into Sprott Physical Uranium Trust. We covered that when it was first launched and how that impacted the markets. What we are now seeing is the investment, a 10% stake in this. This has been announced by macro hedge fund Caxton Associates. So they filed that they've become a 10% shareholder of the Sprott Physical Uranium Trust. Now, what Caxton is well known as is from the Market Wizard series, a very popular set of books. I've read many of them myself, a great series and highly recommend those books. But that hedge fund is one of the oldest and best known macro hedge funds in the world. Assets under management of more than 11 billion. Large book to work with there, and they've got 11% of the Sprott Physical Uranium Trust. And what they have done is invested and moved and announced that as they have to. You can see the transaction here on screen. The amount that they have invested is nothing short of amazing either. The market value is about US $257 million. That's 11,211,711 units in the trust itself, which moves us over to have a look at the companies on the ASX to see how they've performed and which ones are really being surged higher. We've got more than 6 here because often those who watch comment and say, you forgot about this one, or how about this company? So there's a lot here in this space, but we're going to start off at number 6, 3, 4, 5, 6. We come to NXG, bring that chart over to have a look at NXG's movement. We'll type that in manually and see that it has low liquidity and doesn't trade anywhere near as much as some of the more popular ones. But the movement from $5.20 to $8 in a short amount of time does get them ramping up quickly. We move on up into DEV. DevEx Resources, 31.98% return over the last month, 74% rolling for the year. We do see this movement in under 35 cents, pushing up over the overhead resistance of 45, 45.5, and doing that into Friday's close with a good solid close into the end of day trade. That's the good strong bar there with a bit of a volume push up here on the last day. Ideally, we'd want to see that higher moving through a swing high, but nonetheless, that's how it's moving. AGE, Alligator Energy. This is one that we have covered many times. And the share price, the chart shows why we're getting these massive rallies here. Good strong volumes supported here at the bottom end of the chart. These volume bars are supportive of a movement and breaking out of this consolidation once again. Solid green bars, volume spikes going out, and then whether it's drifting back, we're seeing not a huge amount of volume drifting back, but it churns sideways. Volatility contraction pattern. If you're new to that pattern, it's one we strongly recommend to look at because Mark Minervini has used it for 4 times US Trading Championships wins, and that's one to look at with the VCP. And we see volatility contracting here. We see each of these pullbacks getting smaller and smaller before breaking out over the overhead resistance of 8 cents. A great chart to trade there, getting to the 10-cent mark, which is critical for Australian trading. GTR being the ticker, GTI Resources, 45.68% movement, under 2 cents, 2.1, getting up to 3.3. Not a favored for liquidity, but AVL does have exposure. We're looking at companies that do have tenements as well, or some sort of exposure to the commodity. So vanadium may be their main focus, but if they do have uranium exposure in the right markets, in the right geographies, that can surge the prices along. So we're looking at AVL, their movement, 3.5 cents, getting up towards 7 in a short amount of time. If you're new to high and tight flags, you can click on screen to learn that one, because when you have an explosive movement of 100% or more in a short amount of time, that can trigger a high and tight flag. We get congestion here in the top third of this short rally. If you measure from the low to the high, that can be a high tight flag, and often that precedes another advance over this same amount. So imagine putting 3.5 cent rally on, say, 6 cents. That can be the breakout and a great trade to look for. Moving up to the top performer, BKY being the best exposed to the uranium commodity and markets on the ASX. We've seen it move from 25.25 all the way up to 55 in a matter of weeks. You can see the volume has gone through the roof. 15th of March, it's skyrocketed and just run and run and run harder and harder. Breaking out through overhead resistance, we've seen a fair bit of turn through here, bit of volume turnover, but breaks through for 35 cents and just keeps soaring. They are the best performers. Now, ones that many do trade and look at is Paladin Energy when focusing on uranium in the Australian markets. Having a look at the charts here, we're seeing that same sort of movement. Seeing these contractions tighten, coming off support at 70 cents. The inability to close lower keeps showing that there is demand in that area. We do see that it is tightening up. These pullbacks here were on large volume, but quickly reversed. It showed that the selling was depleted, had it phased out, had run out of momentum, but it is seeing overhead resistance at 90. This can also be accumulation. So paying close attention to the volume price analysis here to see how this does trade and behave, because it is still maintaining these higher lows that have been made in the successive weeks over the last few. These are the best performers on the ASX. This is Final Market Points, where we do bring and connect the leading market themes and the top performing companies for better trading. You can like the video to support the channel, click subscribe for updates, and comment below to let us know which uranium miners you're trading and why.